I don't really want to be an accountant. I really don't want to understand all the adjusting journal entries and trial balances and all the stuff that accountant debits and credits, all the stuff that accountants have to do. I really don't want anything to do with that. What I want is optics. I got to be able to figure out how to take the numbers that I see and convert those back into activities. Accountants take activities and convert them into numbers. We get the numbers. What we got to be able to do is reverse engineer back into the activities so that we can change the activities so that we wind up with different numbers. Hello? All right. That's where we're headed. The easy part is what accountants do. And if the key, I'm going to say this, if the key to getting rich was only understanding the language, all accountants would be rich. And they're not, so it isn't. You got to be able to understand the language of how those activities get converted into numbers so that we can then, and this is the so what. The so what of yesterday is laying the foundation so that this morning, in about 45 minutes, I can teach you something that will reverse engineer, and you can look at numbers and get optics on the activities, and now we know what to change. It's not the only thing. Yeah, I'm excited about it. And the reason is because when you get better optics, you'll make better decisions. When you make better decisions, you pay less dumb tax. You pay less dumb tax, you can get rich. Here's the key to getting rich. The key to getting rich. This could be the most important thing I'm going to say. The key to getting rich is doing fewer stupid things. It is. I'm telling you, this is absolutely true. Let me ask you a question. I'm going to ask you this question. How much money would you have right now if I gave you the ability to unwind any 3 financial decisions you've ever made in your whole life? How much money would you have? You just go ahead and think about the size of that number. There isn't a person in this room who's sitting around saying it'd be about the same. Every person in this room, if you could unwind any 3 financial decisions you've ever made, you'd have multiples of the amount of money you have right now. The key to getting rich is not doing more smart things, it's doing fewer stupid things. I'd write that down if I were you. Seriously, the road less stupid. How do we do fewer stupid things? It's an intellectual game. And every time you wind up using your emotion, your gut, and your glands to make what should be an intellectual decision, it oftentimes comes back in the form of a loss. And that's what sabotaging is. We don't have the skills and tools, and so we revert to our emotions. We don't have the facts, so we revert to a story. We get very adept at telling a story about what's going on, as opposed to really looking at the facts. In 300 BC, the Egyptian priest wrote on a stone tablet a note to Pharaoh. The note they wrote, this is the stone, the note they wrote at the very top to Pharaoh was in Egyptian hieroglyphics. In the middle section, there's the same exact note written in the local Egyptian dialect at the time called Demonic. In the far right-hand side of this stone, they wrote the exact same note to Pharaoh that was written in Greek. So it's one of those peculiar things where the Egyptian priests wrote this note. They used 3 different languages, and the note basically said, Pharaoh is a stud. We love Pharaoh. Pharaoh is the greatest guy that's ever lived. We hope he lives a long, long time. We love Pharaoh. So that's the whole note. It's just written in 3 different languages. Fast forward about 1,000 years. Now we're to about 700 AD. So 1,000 years later, the Arabs overthrew Egypt, and as they did back in the day, when one country conquered another country, first thing they did is whacked everybody that could read and write. So all the priests got killed, and nobody else in the country knew how to read and write, and so when that happened, nobody knew how to read Egyptian hieroglyphics. Fast forward about another 900 or 1,000 years. So now all these tombs in Egypt, everybody walks up to Pharaoh's tomb or the pyramids, and there's all these little squiggly lines and hieroglyphics and snakes, and nobody has a clue what it means. Because all the people that knew about that were killed 1,000 years before. So it's about 1800, so about 1,000 years later. And France is conquering Egypt. And France is in a place, when they're going through Egypt, they're in a city called Rosetta, Egypt. And they stumble across this stone in the sand, and they uncover it, and they go, oh my gosh, I mean, this looks like it's a message to Pharaoh. And the French could read the Greek. Everybody could read this one right here. They kind of knew what this one said, and they were pretty sure that the stone said the same thing because they were reading Greek, and they kind of knew demonic. And they kind of deduced, oh my gosh, here's this, it looks like it might be the same message in Egyptian hieroglyphics. If we can understand Greek, maybe we can reverse engineer into Egyptian hieroglyphics. So they worked on this for a couple years, and eventually they sorted it out. And the Rosetta Stone is very, very famous now because it's the tool that enabled us to be able to have a shot at reading Egyptian hieroglyphics. Were it not for the Rosetta Stone, it never would have been sorted out. Well, what I've done is I've created a Rosetta Stone for business, a Rosetta Stone for financial optics. And this is what it looks like in your notebook. In your notebook, you're going to need to get your notebook. Because you and I are going to work out of your notebook. You're going to need a pencil or a pen and your notebook in order to work with me this morning. So get that out. On about a page 114 is where my piece of this thing actually starts. And I think if you turn to page 114, this is probably not on page 114, but it might be on page 116 or 17 or 118. So turn to page 118 in your notebook. And you'll find this Rosetta Stone. And what you'll see on the Rosetta Stone, stay with me now, stay with me. Watch me unwrap this. What you'll see on the Rosetta Stone is at the top of the page, there's something called assets. And underneath assets is cash, accounts receivable, inventory, property, plant, and equipment. So that's the things and stuff, and it's the exact same things we talked about earlier on. This is on page 118. Now watch this. Assets equals liabilities, how much you owe, and there's 3 different kinds of liabilities: accounts payable, taxes payable, notes payable. Those are the 3 different kinds of liabilities. Assets equals liabilities plus owner's equity. This is what the business owns. And a business owns 2 things. It owns the investment that was made by the shareholders, and a business owns its earnings. So what you and I are going to do is we're going to use the Rosetta Stone, the financial Rosetta Stone, in order to create optics. So we're going to get a balance sheet, income statement, and statement of cash flow in a different kind of format and see if that's not the key to help us produce optics. Turn in your notebook. This may be page 114. Is that true in your notebook or not? I don't know. Page 114. Okay, on page 114, here's the balance sheet. So let's suppose you and I own a lemonade company. And we get to the end of the first year and our accountants give us this balance sheet. What most of us are going to do is look at this balance sheet and say, I got nothing. And so we turn the page and we look at the income statement. This is the one we get all juicy about. This is the one where everybody goes, oh yeah, let me really pay attention. And the first number you're looking at is down here at the bottom. That's where everybody's eyes goes. They say, well, how much profit did we make? What's the bottom line? Well, the bottom line is $17,200. Then we say, okay, well, how much is the revenue? $50,000. And then what we say is, oh, I tell you what I need to do. I just need to grow this thing. If I could just add to my top line, that would somehow automatically translate into more bottom line profit, which is not necessarily true. In fact, it's seldom true. It's seldom true that growing the top line automatically causes more bottom line profit. Somebody has to be in control of the expenses, and most of us forget that. All right, so this is, I got two pieces of paper the accountants have given us. I got the piece of paper called the balance sheet, that's a major dial. And then I got this piece of paper, another major dial from the accountants called an income statement. I can see on the balance sheet that I had $1,700 of cash, and I can see on the balance sheet that I had $17,200 of profits. I got two numbers on here that I could go back and look for more. So this is on the balance sheet, $1,700 of cash, $17,200 of profits. So I say, well, I wonder how I got to $17,200 of profits. Well, I'll tell you how you did that, Keith. You got $50,000 in sales, and then you had cost of goods sold of $10,000, and then you had some operating expenses of $18,000, and some depreciation, and some interest, and some taxes. And when you add all that up, you turn $50,000 into $17,200. And if I go back to the balance sheet, I can see on the balance sheet that I had $1,700 of cash. And if I wanted to, I could actually go to the third piece of paper that accountants give me, which is called a statement of cash flow. And on the statement of cash flow, if I look at the very bottom, I can see that I ended up with $1,700 of cash. So we started the business at the beginning of the year, we had zero cash. And then we had this cash flow right here, and we ended with $1,700 at the end of the year. Most of us have never seen this piece of paper. Most of us, in running our businesses, have never received a statement of cash flow from our accounting team. And we wonder why we're struggling. Well, one of the reasons we're struggling is we're trying to fly our airplane without a major dial. This is a major dial. There's a lot of good juice on this piece of paper, but if I never see it, if I never knew about it, chances are I'm going to crash or run out of fuel or something. Now watch what happens on this piece of paper. At the very top, there's beginning cash, so this is a startup. This is year one of the Mighty Fine Lemonade Company. I started with zero cash, and then I had some operating cash, and then I had some investing cash flow, and then I had some financing cash flow. So if I started with zero and had these OIF, operating, investing, financing, cash, and I add those up, I'm going to have $1,700 left over at the end of the year. So those are the three major dials. And most of us have never seen this third dial. Here are all the transactions that occurred during the course of the year that caused our accountants to produce those three dials, those three pieces of paper: balance sheet, income statement, statement of cash flow. Here are all the transactions. What page is this on in your notebook? 117. 117. Turn to page 117. All of these are words hear me, this is going to be kind of critical. I'm setting up the next hour in the next 15 seconds. Accountants take words and convert it into numbers. As business owners, we don't want that. We want to look at the numbers and convert them back into words so that we know what happened. We know the story. We know the activities that occurred that caused the numbers. And if we can reverse engineer, we now have an opportunity to actually proactively, intentionally run our business instead of having our business run us. Without optics, without measuring, without standards, without dashboards, without accountability, I promise you, you will be tired. You will be tired because you are in an operator mode. And what we want to learn to do, all of my teaching, no matter where I go or what I'm doing, Austin, Texas, West Palm Beach, London, Australia, all over the world, all of my teaching is centered around one idea. How do we transition from operator to owner? What are the skills and tools that are required in order to successfully migrate, make that transition so that we're running the business instead of the business running us? These are all of the transactions, all of the words. And what accountants do all day long is they take these words and put them on a balance sheet, an income statement, and a statement of cash flow. That's how that happens. What you and I are going to do is just a tiny little bit of accounting, just a little bit, and instead of putting it on a balance sheet, an income statement, and a statement of cash flow, what we're going to do is record it on a Rosetta Stone. Then we're going to see whether or not we have optics. Now check this out. Remember this at the top, I have assets equal liabilities plus equity.